Good morning, Paul Georgie from Allendale. It's August 9th, Friday morning, and grain markets overnight relatively quiet. Soybeans continue to rally somewhat off of economic and export news out of China. The weather and cash markets continue to be a focus that traders are looking at, waiting for some change there. But weather forecasts are holding pretty steady with yesterday, and basis continues to firm. However, cash bean basis continues to strengthen. Demand from the processor is still very good. There was some farmer selling late yesterday, but not enough to fill the needs of the processors right now. The margins for processing soybeans continue to narrow. However, meal basis is still sluggish, and demand waning as we get closer to the end of this crop year and into next. So the other big focus that we've got to have that's in front of us here today is the USDA supply demand report that comes out on Monday. The question is, will traders do some evening of positions ahead of that report and ahead of the weekend? We'll have to monitor that very closely. But some of the trade estimates for corn ending stocks, old crop is in line with what the USDA had last month at around 725. New crop corn, they're increasing production there and increasing the ending stocks for corn up to 1971 versus the USDA's 1959 last month. And soybeans is where the bullish factor comes in. The trade is dropping estimates on the ending stocks in soybeans all the way from the 295 that USDA had down to 263, and there's even several analysts that think we could even be lower than that on that ending stocks number. So that could create some volatility in the soybean complex. The other news, China is continuing to buy soybeans. The amount of new crop beans that are on the books now sold to China is about 700,000 tons greater than last year's record. So we're monitoring that closely, and if we do get a lower production number in soybeans, could create some more volatility there. In the corn market and out of South America, analysts are becoming stronger, feeling that we have increased production in South America up to 83 million metric tons and even higher. The USDA right now is, I believe, at 81.5 million. So watching that on this next report, will the USDA raise their numbers accordingly to the analysts and information that's coming out of Brazil? The livestock market is where the chatter is. The Zilmax feed additive issue that Tyson says they're not going to buy cattle that have been fed that additive after September 6th has provided some support yesterday to the cattle market. And once you look at the numbers and work through the numbers, it suggests that it may not be as exciting of a change as the traders thought initially yesterday. It's more of a longer term, could have a longer term effect on the market because there's other feed additives that can be used and that may not have as much impact and won't be cut off by packers. So those are things that we're watching. We got the cutout values still weak in cattle. Choice down 35, select down 38, pork cutout values down 64. So we still need some demand for product in order to get this cattle market moving in the upward direction. Also, from a technical perspective, we need a close above this 127 area. A two-day close above there would be positive and could give us some reason to move this market higher. So again, a lot of things going on. Stay in touch with Allendale's research. You can reach us at 800-262-7538. We wish everybody a very successful trading day, safe weekend, and I'll talk to you on Monday morning.